Happy Friday, everyone. Got a lot of fun stuff to talk about today. We're going to start out with some Excel stuff, and then we're going to move on to some discussion of AI. So, not to waste time on the festivities, let's just go ahead and get started. So, please make sure you've downloaded the sample data sets for data set 7, parts 1 and 2, two separate files. Just recall that last week when we talked about this, we talked about our first set of data analytics. We talked about um, descriptive analytics and diagnostic analytics or diagnostic analysis, depending how you want to talk about it. But so our remainder is going to be predictive and prescriptive analytics. Now, when we talked about descriptive is saying what happened. Our example of that was just doing our accounts receivable aging. And then our diagnostic analytics was saying why did it happen? And an example of that was doing our journal entry testing or journal entry analysis and trying to determine if segregation of duties had been violated. Now, admittedly, our analysis for diagnostic was not perfect because the next step would be to investigate why something occur, but it does give us the information about what it is we need to investigate. So today we're going to be moving on to kind of future analysis. We're going to be talking about predictive analysis and prescriptive analysis. And these are going to be a little bit more robust, a little bit more challenging, but hopefully you get something valuable out of them. So let's go ahead and start with part 1. And we're going to be doing something today called Altman Z-score. Has anybody in finance heard of Altman Z-score before? So Altman Z-score was developed by a researcher. I believe his name is Robert Altman, but it could be Edward Altman. It's somebody Altman, Dr. Altman. We'll go with that. And he predicted a combination of financial information that would predict whether or not an organization was likely to go bankrupt in the near future. So we're going to talk about how we calculate that and then what we use that for. Now, Altman Z-score is not particularly difficult to calculate if you have the necessary variables. Good news is we do. This is a CompuStat download, which is a financial systems database that's available to academic researchers. And so this shows some analysis for different companies. The companies' names are not listed, but their statistics are. And so we can use this to figure out what's going on. Now I'm going to jump between the connect links and the information that we're going to be working with. So Altman considered 20 possible ratios. Edward Altman, I was right. I said Robert Altman. I think Robert Altman's a director. My apologies. But Edward Altman, Edward Altman considered 20 possible ratios and found that the 5 most common business ratios are best predictors. So working capital, retained earnings, earnings before interest and taxes, market value, stockholder equity, and sales. Now, you may say that it looks like that they're being divided by a number, and the answer is that's correct. But one common procedure used in accounting research and business research and finance research and all these areas of research is to scale all of these numbers by a common element so they can be comparable across companies. So you think a company like Dollar General and Walmart, if you want to compare those two, well, Walmart is literally 10 times larger than Dollar General in terms of market capitalization. So the whole purpose of dividing by these numbers is to scale these variables so they're common basis for analysis. So if we have this information, then it's pretty easy to do this analysis. So scrolling down, let's go ahead and go down to this area about how we're going to set this up. And you can kind of see we're going to go put these elements in here. So our first step is to create some columns that are going to be relevant to us. So there were 5 variables, and we're going to create 5 variable columns for analysis. So let's go ahead and do that. Very, very simple and basic and straightforward. We're just going to go X1 in cell M1. And then we don't even need to type in X2, X3, X4, X5 because we can do that automatic for us if we just autofill the next 5 columns. And then R1, let's just go ahead and put Altman Z. It's going to be our calculation of the Z-score. All right. So the first part is kind of the mundane routine part. This is where we're going to be putting our inputs in. So let's go ahead and look and see what it is that we need to put in for here. So X1 is working capital. Now, hopefully everybody remembers working capital from your 221 class or your finance class. That is just current assets minus current liabilities. So we're going to take ACT minus LCT or AT, or as the cells are going to be looking at is going to be D2 minus G2 over E2. So going back to our file. So current assets versus divided or minus current liabilities, and then we're going to divide by total assets. So equals, and you will need to put this in parentheses because we do want to make sure we have our order of operations correct. D2 minus G2, close parentheses, divide by E2. Make sure I got that correct. I guess I can check that after the fact. But anyway, so I believe that's correct, yeah. All right. Next one is going to be our retained earnings. And this one's a little bit more easy because we've only got one variable we need to calculate for retained earnings, just retained earnings, RE. So J2 divided by E2. You will notice that they've got negative return earnings in this one, which is never a good sign, but we can ignore that for the time being because we're going to copy that across all companies. Then we've got earnings before interest and taxes divided by total assets. So again, we've only got one variable for earnings before interest and taxes. It's given here, divided by total assets, F2 divided by E2. And we got a little bit something different for X4. So we want to actually divide by market or book value of total debt, but we want to divide market value of total stockholders' equity. So market values equity is given in the problem, but we're not going to divide by assets. We're going to divide instead by total debt owed. So it's a little bit different. This formula is going to be L2 divided by H2 is given in the problem. So equals L2 divided by H2. And then our final variable is pretty straightforward. We're going to be dividing sales divided by total assets. So this is going to be a solvency calculation. Basically, how well their sales are, or how strong their sales are relative to their total asset portfolio. All right, so those are the variables. Now that's enough right now. The problem with this is that we need to calculate a score, but it's important to note not all the variables weigh the same in the score. Some of these variables are far more important than other variables. So we need to assign some weights. This is not particularly difficult, but it will require us to do some analysis or do some rate or some weight inputs. So you can kind of see right here, and we can check our numbers right here. For some reason, it puts dollar values in here, but Excel recognized that these are not dollar value inputs; these are ratio inputs. So should be 0.21. We can actually check it. 0.21, 0.943, 7. 0.20476, 0.0081, and then 3.94. So I know I'm clicking back and forth, and that's really annoying. I apologize. I just wanted to make sure I got all the variables correct. All right. So our next step is to create our z-score formula. So as we can see, we've got our weights here: 1.2, 1.4, 3.3, 0.6, and then we don't need to add a weight for the last one because it's just 1.0. Now, this is the formula they tell you to enter. Does everybody remember PEMDAS back from basic math? All right, so Excel does follow PEMDAS formulas, so we don't have to worry about the parentheses since the multiples will take place first. So these parentheses are actually not necessary. All you do need to do is to multiply times the weight. So let's go ahead and do that. So we're gonna, oops, I guess I should probably do the right Excel spreadsheet. I've got multiple Excel spreadsheets open, which is very confusing. So we're gonna go equals 1.2 times, and then we're gonna go over to M2, which is our first X1 input. Then we're going to do plus. Then you're going to go, actually, let's do 1.4 since we're going to do our exponents first. And then we're going to go over to N2 plus 3.3 times O2 plus, I don't remember off the top of my head what the weight is. I think it's 1.6, 0.6. Glad I checked. 0.6 times our X4 variable, then plus, and then again, remember the last variable is just 1, so we don't even need to multiply. We can just put in Q2. So if you're curious about what the formula should look like, 1.2 times M2, 1.4 times N2, 3.3 times O2, 0.6 times P2, and then Q2. And we should come up with a score of 2.6976, which we can check that against what the answer is in the book. That should be our Z-score. Now, even though we've got upwards of how many observations? 257 observations. If we've done this all correctly, which is why we're being so diligent about checking, then we can just flash fill this down. Makes you love Excel right there when you get to do that. Instead of having to enter it 256 times, we just enter it once, copy everything, right? So that is kind of the busy work. Now, how are we going to evaluate this? Basically, Altman said is in his analysis, he says that there are certain ranges that we need to be very aware of. If the z-score is less than 1.8, then the organization is very, very heavily going to be very heavily directed towards the risk of bankruptcy. So any organization with a z-score below 1.8 is likely to go bankrupt. Anything between 1.8 and 3 is going to be somewhat in the gray area. They have risks, but it's not nearly very high risks. They're probably long-term problems, but not immediate concerns. Anything above 3 is very low likelihood to go bankrupt. So what we're going to do is we're going to separate these out. Now, I would like to say that this part is the exciting part. We will get some detail, but unfortunately, this is a lot less engaging than I would like it to be. This was kind of the interesting part doing the analysis or doing the formula entry. The analysis itself is actually pretty straightforward. So let's go ahead and do one thing real quick. What I'd like to do is go over to File. We're going to go to Options. And I'd like you to go to Add-ins. Now, in all likelihood, you do not have any add-ins active on your computer, and we're going to need one of these add-ins for one of these routines that we're going to do. So let's go ahead and down where it says Manage Excel Add-ins, click Go. And we're going to click on next to Analysis Toolpack. Now, I know this seems really exciting. Trust me when I say this is going to be a big letdown when you see the results, okay? So don't get your hopes too high. Put your hopes about 50% of what your normal expectation would be. It's like, oh, cool, we're using a new tool. Dr. Barnes is going to give us something really exciting. No, it's not that exciting. I'm just tempering your expectations right now. Okay. So what we need to do is we need to actually set up a range for analysis. We're going to create what's called a histogram, which we've already talked about a histogram from our perspective, our analysis, which we talked about univariate analysis in chapter 3, and we use a histogram for that. We're going to be doing something very similar, but it's a very simple histogram. So what I want you to do is in T1, I want you to type in the word bins. And we're going to create 2 bins. We're going to create one that's 1.7, and then we'll type in 5 nines. And then we're going to do another bin that's 2 followed by 6 nines. And this is roughly approximating our ranges for analysis. Remember I said 1.8 was our breakpoint for one, and then 3 point was our breakpoint for the other. This is kind of showing everything that's up to a certain range, close to, but not exactly at those ranges. All right, now let's go to data. And if you've enabled your analysis toolpack, you should have a button called data analysis. So go ahead and click on that. And we're going to select histogram. This is going to create a histogram range for us. And our input range is pretty straightforward. It's basically going to be everything that's in column R that we put input in. So basically highlight everything that we've input in R. Make sure you check it. Should go down to 257. Our bin range is going to be what we just created, T1 through T3. All right, before we move forward, you will notice that there's a check mark here, a check mark box for labels. We have not specified that yet. You will need to check that. If you do not check it, you will get an error back. Again, this is experience talking, all right? Me going through these, trying to make sure that I get everything right and clicking. I was like, what is wrong? Why won't this work? Yeah, because I haven't clicked labels. Now let's just go ahead and we'll create a new worksheet for this. And unfortunately, that's it. That's what we get for the new worksheet, which is really a big letdown. I know everybody's exciting, but basically this is telling us what we were looking at before. So of the 255 companies, I think it was 250, actually 256 companies, 63 of these companies have been identified at high risk for bankruptcy. 61 of them are kind of in the gray area, and then 132 are in the range of safe. So let's say that you're doing a financial analysis for one of your classes, and your instructor says, which of these companies do you think is the highest risk of bankruptcy? You're going to say, well, I identified 63 of the 256 companies that I think are likely to go bankrupt in the near future. Which again, it's not a real compelling visualization. I know we wanted to have something that was really kind of profound and pronounced, But this does provide us with exactly what we're looking for, a predictive analysis. This does predict for us what we think is going to happen with respect to bankruptcy. So even though it's not a really great visualization, we could create something that was a pretty profound visualization in this area. It does give us exactly what we're looking for. So the setup was worth it. Now, by the way, if you want to do this analysis, do not invest in this range of companies right here. That's a bad idea. Okay. That's a bad idea. That's just free advice for me. Okay. Probably don't really invest in these companies, either of these companies' ranges right down here. All right, let's go ahead and move on to our prescriptive analysis, which is going to be 7.2. So this is going to be reflecting back on something in 221. And you probably say, Dr. Barnes, you do that a lot. You talk about managerial accounting. I says, well, I'm comfortable with managerial accounting. I taught it for several years, but that's just happenstance. This just happened to be something we talk about. How many remember break-even analysis from your managerial accounting class? Yeah, so break-even analysis is basically the point at which we recoup exactly all of our costs through our revenues, where costs and revenues are exactly the same. And we're going to be doing that in Excel, but we're going to be doing it in a really sneaky manner. So basically, a break-even analysis is a prescriptive analysis. A prescriptive analysis tells us we expect to have cost of X dollars, or we expect to have cost of certain amounts. What do we need to do to recover all of our costs? Now, I wanted to say a cost of X dollars, but the costs obviously change as you increase your variable, as you increase your sales. So if you sell 100 units, your cost will increase if you sell 5 more units of that because of the variable costs. But we can account for that. We can actually make adjustments. Now, normally we would just do a break-even cost calculation, but we can do something that's a little bit more robust for us in Excel. But that does require us to do some basic analysis. So let's go ahead and do that. So first of all, we need to do some calculations for variable cost, and it's really important that we do this analysis manual, or we do this analysis not manually do the calculations, but we do the formulas for this. So if I wanted to create a formula that calculated variable cost here, what would I use? Probably units of sales. Can we say that's the first part? And then unit cost, would that give us total variable cost? Yeah. So we're going to do B3 times B4. And again, this is not the analysis right here. This is simple formulas that I'm sure everybody could do on their own. But I'm just kind of shortcutting so we don't have to go through the chart figuring this out. So total cost. Remember, total cost from managerial accounting is just variable cost plus fixed cost. So B6 plus B5. Then sales revenue. Sales revenue is pretty easy to predict. We know that we have 300 units of sales, and we have a price of $7. So multiply those together, we get total sales revenue. Then we have net income, and net income is just revenue minus cost. So 2,100 minus 2,350, or B8 minus B7, which is unhappy news. If you have net income of negative $250, how do you feel about that as an organization? Pretty lousy, pretty lousy. But we're going to get to that. We're going to get to that. All right, what we need to do is we need to carry this all across. Now, if you're a manager in this position, you're looking at projected sales figure for the coming year, you're probably not very happy about what your organization looks like. You've got consistently negative sales or negative income for the rest of the year, and that's not a sustainable operating position. Unless in the U.S. government, of course, but that's probably a low blow. That's probably a low blow. Anyway, but we're talking about how we would actually adapt to this. Your first question would be, how much will we need to increase sales in order to break even, in order to match those costs? Now, again, we have formulas for this, but let's assume that we can do that, have Excel do the heavy lifting for us. So what do we want this number, this net income to be if we want to be at break even? What is that number always going to be? 0, okay? So let's go ahead and create some goals. So we're going to go to data. We're going to go to what if analysis over here under data. And we're going to do a goal seek. So we're going to set cell, which is the current one we've identified, B9. And we're going to set it to value of 0. What we're going to do is we're going to make adjustments to another cell that's responsible for that formula to be able to make that number turn into 0. So our inputs were our first 4 cells up here, okay? Which one of these cells do we want to adjust for a break-even analysis? Which one's the one that's going to be adjustable? Units of sales, yes. So go ahead, by changing cell, we're going to select B3. No, because we're not going to adjust, we're not going to adjust price. We're not going to adjust the unit price. We're not going to adjust the unit cost. We're just going to adjust the number of units we want to sell. Yeah. All right. So do that. Go ahead and click OK. And really quickly, it identifies, look, if we're going to break even, we've got to sell 400 units. And we could check that. We could actually do our break-even analysis to check and see if those numbers are correct. Now, the interesting part is that this gives us our break-even at unit cost of 450. But what do we project for future periods? Does unit cost remain the same? No, it looks like unit cost is changing. So we can do this for every month independently. Now, I have some bad news for you. This is not something that we can copy and paste over, all right? Unfortunately, when you use a specialized function like this, we can't copy and paste it over. So here's what I'd like you to do. I'm going to give you like a couple minutes. I would like you to do goal seek for the next 3 months, and we're going to compare our results. All right. So I'll give you a couple of minutes. I probably was a little bit short of 2 minutes, but we got so much to talk about. I wanted to spend time. So if you did a few months, you came up with 384.62, 370.37, and 357.14, which again is a function of the fact that unit cost is changing from period to period. So we have to account for that. But if we have this function, we have all these variables, can we agree that this is probably a little bit easier step than going and calculating break even for each individual month? Especially since we can make the adjustments and change. Let's just do one more just for fun. Let's assume that we're tired of breaking even. We want to make a profit, because remember, break even is just target profit with profit set at 0. So everybody remember that from 221? I'm teaching you more 221 than I am AIS in this class. Yeah. It's like, I'm going to feel like I'm an expert in managerial accounting again after this class, Dr. Barnes. So target profit, let's go ahead and just do a quick one. Let's go ahead and do another goal seek, but instead of setting it equal to 0, oops, let's set it equal to 500. So everybody gets 625 units? That was a legitimate question. I've never done this before. I'm just making sure I got the same answer as everybody else. I have confidence in my abilities, but sometimes it just does go astray, especially when I make a misclick. So kind of cool that we can do that. And again, how does this meet the prescriptive analysis? We anticipate what we know or we think will happen with respect to unit cost in the future. How is that going to change our sales goals for those periods? That's going to be a question that we had asked and something that we want an answer to. And this gives us a pretty distinct and clear answer. Now, is this going to be precise? No. Looking to the future never is, but it does give us some guidelines of which to operate. All right. So with that, we're done with another Excel. We'll get back to the more open-ended Excel stuff next week. But I did think it was important to go through these analysis items as we're moving forward. So before we get started on what we're going to be talking about, we're going to talking about vibe coding. I did want to talk about something that might be helpful for your project. So one thing that one of my students from last year talked about how usefulness of AI can be helpful if you need to summarize mass amounts of information. All right. And this came into contact with respect to reading. This student was saying, if my instructor assigns me 80 pages of reading, I don't have the time as a human being or the patience as a human being to read that. So I just put it into AI and have it summarized by the important points. And part of me is kind of like, well, shame on you. Okay. I never got away with that when I was in the PhD program. But on the other hand, I'm kind of like, that's working smarter, not harder. That's very, very clever. So you can use this to actually analyze information. And this is particularly relevant when we're talking about very complex information. So one of the things that I had downloaded is this paper by Abernathy and others. That's what et al. Means. So John Abernathy, Brooke Beyer, Jimmy Downs, and Eric Rapley. So just for context, the reason I mentioned these four individuals, John Abernathy was actually one of my dissertation advisors at Oklahoma State. And these are all 3 students that I went to the program with. And they all wrote a paper together about high quality information technology and capital investment decisions. It is 55 pages. So I would like everybody in this room to read this paper before next Monday. No, everybody's shaking their heads right now, saying obviously he's not going to have us do that. You're right. Okay. It is relevant to what we're talking about, but I don't. So first of all, I've not read this paper. Okay. I would not make anybody in this room read this paper. If you want to join a PhD program at some point, you may read this paper, who knows? But for the most part, none of us are got the time and patience to do that. So what is something that we can do? Well, we can actually ask AI to do some of the work for us. So I've actually created a prompt here that I wanted to share with you. So can you summarize the research paper, High Quality Information Technology and Capital Investment Decisions by Abernathy, Bayer, Downs, and Rapley, 2020? And guess what? Copilot should be able to do that, especially since it's publicly available. And one of the interesting things about it is it shows the key findings, which are very, very relevant, but it also provides you additional breakdowns. It talks about the research methodology, the data that's used for the study, and how IT quality is measured, which are all very relevant questions when you start talking about research. So in the future, if you ever come into a writing enhanced course, which some of you may be taking those now, you may be taking a writing enhanced course now, so everybody will take one eventually, and you may have to do some research analysis in the future. It's not required that you sit down and read every single paper word for word. If you find that entertaining and engaging, I encourage you to do so. But in my dissertation, I think I had somewhere around the area of 200 sources. I did not read every single one of those sources. I did some diligent reading, and I spent a lot of time on it. But I will openly say to those of you who approved my dissertation, I didn't read every paper. Sorry, okay? But I do think that this is a valuable tool for getting information on the papers that you do need to use in your citations. Now, if you use something as a major source, I encourage you to do a little bit more diligence than this. But can we actually break this down to things where there's large volumes that are not research-based? And there's the answer. The answer to that is yes. How many people have heard of the anime One Piece? Okay, that's surprising. I thought there would be a lot more hands. I think I'm really, really chill and cool. I'm going to talk about something that everybody knows about, and then like 1/3 of the class raised their hands, and it was very tentative. It's like, I don't want to be a nerd. I know about it. Okay. I know I'm a big nerd, but I know about this. So this is a manga from Japan. It's based on 119 volumes. I only know that because I looked at Wikipedia. And the anime itself is something around over 1,100 episodes. So that is literally 550 hours of viewing time. So that's a lot of time. It's been on since the 1990s. So I found out about this because there was a Netflix show that was a live action adaptation of this. And I watched the Netflix show. So it's kind of cute. I wonder what the anime is like. And then I saw, 1,100 episodes. No, that's not going to happen. So is there a way to compress this down into a time frame that's a little bit better? And the answer is yes, there is. So I created another prompt, which is completely and totally unrelated to my previous prompt, but I'm going to put it in anyway. So in 300 words or fewer, please summarize the key characters, events, the popular Japanese manga, One Piece. And it does a pretty good job with this. It actually highlights the main characters, talks about the events and themes. It's not comprehensive, but it's actually pretty good. And so if you were ever curious about this, yeah, it talks about this. So the main character, Monkey D. Luffy, which now you say, what did we talk about in AIS today? We talked about One Piece. Dr. Barnes is apparently obsessed with it. Like, no, I just thought it was something cool to talk about. So yeah, becoming the Pirate King and finding the legendary treasure of the One Piece. That's the whole thing. I haven't spoiled anything for anybody, by the way, just in case you were planning on watching this. So yeah, some interesting stuff that talks about this, and it can, again, drill down in detail about some interesting stuff that you might want to know about. But yeah, I think this is kind of a very valuable tool for summarizing aggregate large pieces of information. It doesn't necessarily have to be something that's academic and be something for fun, something that you just don't have the time, but you're interested in engaging with and looking in detail. All right, let's go ahead and talk about our main topic. So how many people have heard the term vibe coding already? Wow, I'm on top of something that's modern and nobody else has heard it. Okay. And maybe it was like, well, Dr. Barnes, we expect to get all our culture from you. And it's like, well, if you do, that's a bad resource right there. Okay. I am culturally illiterate in the modern culture. Actually, this is something that's fairly profound. And I only heard about this a few weeks ago at a conference that I went to. So vibe coding basically means is where we use a chatbot-based approach to create software the developer ascribes as a project or task to a large language model, which generates code based on the prompt. In other words, and this is from Wikipedia, by the way, which I know that your other course will say don't use Wikipedia as a source. I love Wikipedia, so I thought this was a good definition. So basically what this is saying is that instead of being able to program or code in a particular language, you have the LLM do that for you. And that seems like a shortcut. It seems like we're in this generation right now. It's like, okay, it's a shortcut. I feel bad. I should be doing the work myself. I'll be honest. The languages I know to code in, I could count on one hand. I actually probably could count them on like two fingers. Okay. I do not know how to code in some of the most relevant languages. I know very, very basic amounts of SQL. I do know some R coding for statistics. I used to know how to do statistical analysis software because that's where my dissertation was. But my coding knowledge is very, very limited and very rudimentary in most areas. The great news about LLM models is that they're very good at coding, very, very powerful at coding, and they can do it in multiple different platforms. So why not leverage this to actually be helpful to us? And this is an interesting question. And I'll be honest, I went down a little bit of a rabbit hole over the past few days trying to figure out how we can do this. So I wanted to show you some examples of how we could actually use this in a routine and something helpful. And this may be something that you want to utilize in your own research as you're going to be planning for. Maybe not. I decided to focus on HTML as my coding because I know zero about HTML code. So I wanted to see if I could actually create some HTML programs. Now, for the vibe coding lesson that I learned a few weeks ago, the presenter was talking about how she had to copy the code into a text file, save the file as an HTML, and then open that file. I discovered that over Copilot, you can actually shortcut that and just have Copilot create the downloadable file for you. So let's go ahead and look at some of the examples that I talked about. So the first one is going to be a crossword puzzle. Now, I don't know, some of you may have actually encountered this. I did a research project that I actually presented to the BSAD 153 class last year. So if you were in 153 last fall, which I'm assuming most of you were not, but if you were, you may have encountered this. But this is an escape room puzzle. It's supposed to be based on cryptocurrency and trying to teach people about basic investing concepts and how cryptocurrency relates to that. So one of the first puzzles that I created was a crossword puzzle. And the idea being is that when you got the crossword puzzle clue correct, this highlighted in green. So the puzzle and solution should look like that. Now, I want to impress everybody that I did this in Excel, okay? Everybody's like, well, that's really cool, Dr. Barnes, you did that in Excel. That must have been really challenging. It was. It took me several hours to actually create this file and a lot more time to edit it. And I was just curious, can I create a similar file in HTML? So I sat down about noon yesterday and I started working through this, and it was a lot more straightforward than I thought. Usually the process is going to be kind of hard to follow, but given this is my first time doing an HTML vibe code, it was kind of interesting what I came up with. So it took me about 45 minutes to work through, but eventually I came up with something that I think was pretty interesting. So there's my crossword puzzle, which again, keep in mind, this is just 45 minutes of working into an AI tool saying, can you create this and making adjustments? The most difficult part I ran into was that I told it to put it into a 9x13 grid. And it was saying, this is row 0, this is column 0. So whenever I said the opening coordinates, if I said it was coordinate number 2 and 1, it would start, or 2 and 1, it would start here and here, because it would move, that would count this as row 0 and this is column 0. I didn't learn this until about 30 minutes into coding because all of my crossword puzzle clues were in the wrong spot. And I was like, okay, I don't know what's going on here. But I eventually figured that out. And it's kind of interesting because we can put this in and do this for analysis. So blank value is what a future amount is worth now. So everybody should know its present value. Oops. Getting too excited here. Keep hitting tab when I want to. So exactly what I wanted from the Excel file, but does this in the HTML file now. And some interesting stuff about this. Originally, it was just anytime that you put in a letter, you had to click on the next cell. I actually asked it, can you make it so that whenever you're going across, you hit the tab key, and whenever you're going down, you hit the enter key, much like you do in Excel. And I was able to do that. So I hit that COMPOUNDING. So yeah, that was my first exercise, my first time to try to do something interesting with coding in HTML. And this is very rough. If I were to try to present this, I would probably do a lot more work at fixing this up. But given this only took me 45 minutes to put this whole thing together, I was pretty impressed with the work that it did. So then I said, is there anything else that I can do? So the next example I want to talk about is something called the Monty Hall problem. Has anybody ever heard of the Monty Hall problem? All right. So this has origins in this TV show called Let's Make a Deal, which I think this is still on the air today. I know that they've had different hosts over it, but the original host of Let's Make a Deal was a gentleman called Monty Hall. And the idea behind Let's Make a Deal is that basically you would be offered a nice prize, and then you have an alternative offer, which you don't know what it is, but you can actually keep your prize that you're given, which is probably moderate in value, or you can take the risk of getting a better prize or worse prize, but you don't know what that prize is. Anyway, the last activity, they had 3 doors, and you select one door, and Monty always showed one door that was not selected. And always behind the door that was not selected, it was a prize of lesser value than the major prize, the biggest prize. The way that it was characterized is that basically there's 3 doors. 2 doors behind them, there's a goat behind them. Okay, an actual physical goat. They actually gave those away in some of the TV shows. Not really give them away, but that was the prize that was listed there. And then one behind one of them is a car. Okay, so you obviously want to get the car. So where does this problem come in? Well, there was some analysis about this problem, is that Monty always seemed to select a door that did not have a fabulous prize behind it whenever the first selection was made. So if you selected door number 1, he would show you either door number 2 or door number 3, and he would know that whichever door he selected, there was a bad prize behind it. There was the less than the fantastic prize. The goat, for example, that's the bad prize. So should you stick with your original door, or should you switch? What do you guys think? So some of you heard this puzzle before. Some of you may know it's like it doesn't make a difference, Dr. Barnes. Still a 50% chance there's only 2 doors. Actually, the way it works out mathematically, you're mathematically incentivized to switch. You win 66% of the time if you switch. You lose, and you only win 33% of the time if you stay with the original door. Now, that may not be intuitive to everybody, so I created an Excel simulator that actually showed this. And this is 10,000 iterations, and basically it just redoes iterations over and over again at random. And you will kind of see that the numbers are pretty consistent for the simulator. Now, I'm very proud of this simulator, but you know what it is not? It is not fun to look at. It's not fun to interact with, because basically it's just typing the letter R for redo over and over again. So then I started saying, could I do this in HTML? And I put together a basic HTML simulator. So, oops, wrong one. This is my multi-hall paradox simulator. So let's go ahead and we're going to select door number 1. And then behind door number 2, there's a goat. So do I switch or stay? So I'm going to switch. I want a fabulous car. And it counts this automatically. And then it starts the routine over again. So door number 1, this time I'm going to stay. I want a fabulous car. So it's still possible I can win. It's 33% chance. Door number 1, switch. Oh, I got a goat. So even though I did the right action, I got the wrong one. And it counts the progressive losses and wins that you have. Now, there's definite ways to improve upon this. So this is something I wanted to kind of talk about because I thought it was interesting. I did try to polish this up, the simulator. This is actually the first file that I created. I tried to polish up the simulator a little bit. I thought, well, what if it actually calculates percentages of wins and losses for both switch and stay decisions? And then also I'd like a picture of the goat or the car behind the door that's revealed. So I tried to embed that into the activity. And what I ended up finding is that trying to add different things on there created problems in the code. So I started getting broken images. And then in one iteration, the switch or stay decision, it was always a win for switch and always a loss for stay. So there was definitely some code overlap. So this is not a perfect tool. This is not something that's going to give you as polished a result as if coding in HTML if you have perfect knowledge of that. But it definitely does provide some interesting alternatives. All right, last one I want to talk about. So we've talked about some games here. And I know that you're thinking, this is all well and good, Dr. Barnes, but I'm not going to be doing a crossword puzzle for my activity. I'm not going to be doing car versus goat for my activity. I really want something that's relevant. So I thought, let's talk about something that might be useful to you, not just in academics, but also in real life. So does everybody remember what we did for our AI analysis last week? We talked about amortization schedules. So I said that this is something that you can do in Excel, and we can actually have AI do the calculation for us, but can we create a loan amortization schedule simulator in HTML? So let's go ahead and let's take a look and see what I put together. This is an image of this, but I want to put this up here. So here's my loan amortization schedule. If you remember, the loan amount that we set up was $200,000. Loan term was 360 periods. Interest rate was 6%. Our start date was January 1st, 2025. Pretty impressive, huh? All right, here's the more impressive stuff, all right? First, this took me exactly 1 try to put together. I entered 1 prompt. It was a fairly detailed prompt, but I didn't have to polish this at all. I could definitely polish this and make this look better, but this is my first attempt at this particular schedule. The more impressive one is I completely forgot to put in one of the inputs when I created this schedule. I completely forgot to actually say you need to specify interest rate. The code actually fixed itself and said, we're missing an interest rate. We've got to include that as part of the file itself. So it self-corrected for that. So there is some redundancy in here and some adaptivity that's available to you. Again, these were all very, very simple routines that I put together. I didn't spend more than 45 minutes on any one of these. This one I spent like 10 minutes on putting together. And I would say this is something that could be inherently valuable to people who don't understand amortization. So it's kind of cool what you can put together. And I think that if you could imagine something that you would want to see on HTML online, something that you would use as an online tool, this is something that you can create in Copilot if you just have the basic understanding of what it is you're looking for. So I wanted to encourage you all to explore that. It doesn't necessarily have to be HTML code. It can be any type of code. But I think that this is a neat visual example and a neat interactive example of things that you can do with these kind of tools. All right. Have a good weekend.